Life insurance, securing
When we talk
funerals,
about those purposes
safeguarding
of life
family
insurance,
income after a
I'm not trying
loss.
to sell you nothing, so you ain't got to worry about that. But if you got more questions, or if I brought something to mind that made sense to you, you can definitely reach out to me on social media, Facebook. I got an Instagram now, and I think I'm on TikTok too. But with that being said, check this out. So, first purpose we know about life insurance, and this is what's common, most people think about, is burial, right? And the average funeral is the prices are coming up for the, but there are some cost saving deals you can get, right? But let's say the average funeral is about $10,000, $15,000, right? And that's pretty close to average. Um, that's one of the purposes of life insurance, and $10,000, $15,000 should take care of that. But it ain't gonna take much more than that. Take care of much more than that, right? You might have a couple bills that you want to close out and that's kind of thing, but that's the first purpose of life insurance is to bury somebody, and that's how much it costs for the most part to do that. Another purpose of life insurance, though, is to replace the income of breadwinners in the house, right? If, let's say, you have two-person home, you got kids in a two-person home, and the two people work, right? And let's say they bring in about half the money. So let's say the $10,000 household, and they both bring in 5,000 equally, right? If that's the case, and somebody passes away, that $10,000 household now goes down to $5,000 household. But here's the thing, they're probably used to spending what? The $10,000. And so life insurance is intended to replace that income so that they won't lose that loved one they just lost, and then 6 months later lose the house, and 6 months later lose the car, and 6 months because they can't maintain the same standard of living that they had while they were still when they were, both parties were together. So it's intended to replace the income. And how do we do that? How do we average that out? One of the tools we use the dime, but we also use the 10 times rule, right? 10 times what your annual income is. And so let's say in this particular case, $100,000 is the annual income. So annual income is $100,000. Well, it is $120,000 because we said $10,000 a month. So $120,000, add a zero, that's $1.2 million. You take the $1.2 million, that's how much the need is for life insurance. That's not like that's not being flippant. That's pretty much what the need is. And we use other tools too, like I said, the dime. But that 10 times of your annual income is a pretty solid assessment.